I am Ethan Brooks, and what I am about to show you will change how you see crypto forever. Here is what nobody is saying out loud right now. The Federal Reserve is about to get a new architect, and this one man's philosophy could send XRP and the entire digital asset market into a move that makes everything from the last 2 years look like a warm-up. His name is Kevin Warsh, and if you know anything about the man who ran the Fed from '87 all the way to 2006, you already feel what is coming. I am talking about the Allan Greenspan playbook. 19 years of sustained market growth, technology innovation allowed to run completely free, interest rates held steady while everyone else was screaming to raise them. The result? One of the longest and most powerful bull markets in American history. Now imagine that philosophy applied to AI, quantum computing, and a digital asset market sitting at the edge of a historic breakout. That is what is on the table right now. And before this video is done, I'm going to show you exactly why the macro setup building right now could be the most powerful XRP catalyst we have ever seen. Stay with me, because the thing I reveal at the end of this video changes the entire picture. Let us start with what is already moving beneath the surface. Oil dropped nearly 6 to 7% in a single session. Why does that matter to XRP? Because oil dropping that fast signals one thing above everything else. A potential peace agreement is being priced in. If the Strait of Hormuz opens back up, if a long-term commitment gets signed, energy prices drop to $80 or $85 a barrel, almost immediately. And when energy drops that fast, markets reprice everything. The inflation narrative collapses, rate hike expectations collapse, and the single biggest anchor dragging risk assets like XRP down for months suddenly disappears. The markets will price this in fast, and most retail investors will not see it until it is already gone. That is the window. That is the moment. But are you going to be ready when it opens? Stay with me, because what connects all of this is something hiding in plain sight. Kevin Warsh is not just a new Fed chairman. He is a signal about what direction monetary policy is heading. And if you understand what Allan Greenspan did through the 1990s and into the early 2000s, you understand exactly what is about to happen. Greenspan's philosophy was simple. When technology is genuinely growing the productive capacity of the economy, you do not choke it with aggressive rate hikes. You let it breathe. You hold rates steady. You let the innovation cycle compound. In the 90s, that innovation was the internet, the dot-com revolution. Greenspan watched productivity data and he understood that rising technological output justified rising asset prices. Not speculation, real structural growth. Fast forward to today, and what do you see? Artificial intelligence is reshaping every industry on the planet. Quantum computing is moving from theory into commercial reality. Digital asset infrastructure is being built at a pace we have never seen before, and XRP sits right at the center of the global financial system's restructuring. Now ask yourself this question. If Allan Greenspan were sitting in the Fed chair today, staring at AI growth curves, staring at institutional digital asset adoption, what do you think he would do with interest rates? He would hold. He would let the innovation run. He would not be the one to put the brakes on the biggest technological leap in human history. And that is exactly what Kevin Warsh has signaled he intends to do. But wait, because here is where most people stop thinking, and this is precisely where you need to lean in hard. There are voices right now screaming that rates need to go up, inflation fears, fiscal concerns, the debt ceiling, the bond market. Every single one of these narratives has been used to suppress risk assets for months, and every single one of them loses power the moment a credible Fed chair stands up and says, "We are not hiking, we are holding, we are letting the growth cycle run." The moment that signal becomes official, watch what happens to institutional positioning in digital assets. Because the smart money does not wait for confirmation, it positions before the announcement. And here is the data most people are completely missing right now. Institutions have been quietly building positions. Whale wallets have been accumulating. On-chain data is showing movement that does not match the surface-level price action. The market looks sideways or slightly down, but underneath the surface, something very different is happening. This is the iceberg. Most people see the price on the screen, and they think that is the story. It is not. The real story is underneath. And what is underneath right now is a massive accumulation pattern, being built by players who understand exactly what a Greenspan-style Fed means for digital asset prices over the next 18 to 24 months. Now let me give you the specific setup that should stop you cold. a potential energy price drop of 20% in oil, combined with a rate hold policy from a Greenspan-style Fed chair, combined with an XRP legal landscape that has fundamentally shifted, creates a macro environment that almost perfectly mirrors the conditions of late 1995 to 1999. The 4 years before the dot-com explosion went completely vertical. I am not saying XRP does what tech stocks did in 1999. I am saying the structural conditions are aligning in a way we have not seen before. And the people who understand that alignment right now are the ones who will not be surprised when it happens. But here is the part that changes everything I just told you. XRP is not just a speculative digital asset sitting on the sidelines of the global financial system. It is the only digital asset that has spent years being purpose-built for institutional cross-border settlement. While other assets were being built for retail speculation, XRP was being quietly adopted by the corridors of global banking infrastructure. And now the macro environment is shifting to favor exactly the kind of institutional adoption that XRP was built for: low rates, technology-friendly monetary policy, a legal framework finally becoming clear, peace agreements reducing global uncertainty, oil prices dropping, the inflation narrative weakening. Every single one of these macro dominoes is falling in the same direction at the same time. Now here is what the XRP price chart is telling us right now. A retest down to the 125 to 130 range is possible in the short term. This is the opportunity level. This is where the macro setup and the technical setup converge. And this is the level where informed positioning makes the most sense, based on everything the macro environment is currently signaling. The short-term noise is bearish. The medium-term macro picture is one of the most bullish setups I've analyzed in years. And here's the truth about noise. The people who panic at noise are the same people who look back 12 months from now, wondering why they did not see it coming. Do not be that person. The Kevin Warsh signal, the oil peace premium, the on-chain accumulation data, the Greenspan-style monetary philosophy about to take hold at the most powerful central bank on earth. None of this is a coincidence. None of this is happening in isolation. These are connected macro forces, all pointing in the same direction at the same time. The window is not infinite. The accumulation phase does not last forever, and the moment the mainstream narrative catches up to what is already being positioned for, that is when the move happens. Fast. Very fast. You now know what most people watching crypto content this week will never connect together. The Greenspan parallel, the oil signal, the Kevin Warsh positioning, the on-chain data building underneath the surface price action. You have the full picture now. The question is what you do with it. If this video changed the way you see XRP, hit that subscribe button right now, because what is coming next makes everything I just told you look small. I am Ethan Brooks. Stay wise, stay positioned, and I will see you in the next one.